Today we are going to talk about a comprehensive problem for chapter number 1, which is Introduction to Managerial Accounting. I have selected this question. In this question we are going to calculate two things. One is we're going to calculate the cost of goods manufactured, and we also going to calculate cost of goods sold. They have provided us information regarding the balances of various accounts. So these three, direct material, work in process, and finished good inventory, are basically three inventory accounts. As you are aware from financial accounting, inventory is an asset. An asset is a permanent account which belongs to a balance sheet, and it has a beginning balance and always have an ending balance. And other information that we have, how much purchase of direct materials we have during this period, and how much labor we have used, and how much manufacturing overhead we have used. As you have read in this chapter, the cost basically has three components: direct material, direct labor, and manufacturing overhead. So we are going to calculate the two costs here. One is the cost of goods manufactured and the cost of goods sold. So I just want to bring, because this chapter talks about this formula, direct material plus direct labor plus manufacturing overhead. So I am going to divide this solution in three T accounts that I am going to use. The first T account is a material account or materials, and the second one is WIP, or as we say, work in process, and the third is our we're going to talk about in a minute, but let's do this here, materials. So consider materials like a warehouse where your raw materials are kept, and this work in process, consider it like a assembly line. So what happened, this warehouse feeds this assembly line, and of course we add things on the work in process, and this assembly line feeds basically to what we call finished goods. So everything, once the goods are completely manufactured in this area, we send it to another warehouse where we keep our finished goods. So your first warehouse, where you keep all the raw materials that you need in order to produce a product. Assembly line, you put together everything and produce a product, and then this product goes into a finished good inventory where it's ready to be sold. So you can think in terms of F-150 truck, Ford truck, that has all the parts over here, and then in this area we assemble those parts with the help of labor and some overhead, and in this part we send those trucks to another warehouse where they stay until they ship to various dealership in the country. Okay, so the information they have provided here is about direct material. There is a beginning balance and ending balance. All right, so the beginning balance for the direct material is 27,000, and the ending balance is 28,000. All right, 28,000. Now this is the T account, so the debit on the left side, credit on the right side. The same here is debit on this left, and credit on the right side. Same thing over here. All right. So in the work in process inventory, we also have a beginning balance, which is 40,000. And there is an ending balance, which is 32,000. Okay. And we also have a finished good inventory that has a beginning balance of 18,000. And we have an ending balance of $25,000. So the other piece of information that we have is we have purchased direct material worth $73,000. So the purchase goes over here. So we have plus, I'm putting a plus sign, purchase of direct materials, and we purchase 73,000. So the total available we have is 73,000 we purchased, 27,000 we have, so it's a total of 100,000. So this is the material available for production. So that's what called material available for production. So we left with 28,000. So we start with 27,000. We purchase 73,000. So we have 100,000 available, and we left with at the end of the period 28,000. That means we have used up $72,000 of material. So what does it by move used up? Because it's a warehouse, you don't use anything. Basically what you did, you transfer to the assembly line. So you have a direct material that you have transferred worth for $72,000. So this is a work in process, also an assembly line. So you have people working here. So you add the direct labor over here, which was given to you in this question for 88,000. And you also have given a manufacturing overhead is 43,000. So your manufacturing overhead is $43,000. So during this period, how much money you have invested? So you already have 40,000 over here. 40,000 plus 72,000 plus 88,000 plus 43,000. So you have $243,000 that you have invested, but you still have a incomplete. So this ending balance showing this is an ending balance of work in process, means some incomplete Ford F-150 trucks that needs to be completed, but will be completed next period. Next period could be mean next month, next quarter, or next year. So how much did we have manufactured? So basically what we are saying, 243 minus the ending balance of 32,000, we have 200 of $11,000. So the difference here is 211,000. So what we have done, we have manufactured this period F-150 truck for $211,000. So this would be our cost of the question that asks cost of goods manufactured. So cost of goods manufactured is 211,000. Now these finished good inventory beginning balance 18,000. So this transfer over here as 211,000, right? So when you add these two, so 211,000 plus the 18,000, you got $229,000. So during this period, you have finished good products of 229,000, but you did not sell all of them. You still have $25,000 left. So if you subtract 229 minus 25,000, you have $204,000 stuff that you have sold. So this will be called cost of goods sold. Okay. So what we have learned here is there's this calculating the cost of goods manufactured, like this one, and this cost of goods sold. So we always starts from the materials. We have a warehouse where we keep all our parts. These parts goes to the assembly line where we assembled these parts with the help of humans. So we have to pay them labor, and we may have some other insignificant things needed in order to assemble these parts, and we call them a manufacturing overhead. So that's how we know that the goods or the trucks that we have assembled this time is 211,000. So what we call cost of goods manufactured, and we transfer this to a finished good, and that's how we know that we sold 204,000 of goods sold. So we already have 18,000. We transferred to 211,000. So we have a total of 229,000. But we have an ending balance of 25,000. That means we have sold the goods for $204,000. Please let me know if you have any questions. I'm going to scan these two pages and put it with the video so you can use these notes and this problem to further your understanding. Thank you.